for Cynthia Moore. I am a small business owner, and this is what my experience, my education, all the things that I have done, I have worked to perfect what I do. I take what I do seriously. My job here is to make sure that you understand how to get your finger on the pulse of your business. Your accounting is the heart of your business. If you don't know who owes you money and you don't know who you owe money to, if you don't know how much it costs to operate your business, then you're doing your business a disservice. The best thing that you can do as a business owner is acknowledge your strengths and your weaknesses. If numbers is not your thing, it's okay. Now you figure out, what do you do to bring that strength to your organization? We're going to talk about record keeping. We're going to talk about the financial statements. We're going to talk about what you need to do to get your finger on the pulse of your business. And when I say that, I mean you want to know what's going to stop your business in its tracks, and you're going to want to know what's going to make it run. I have traveled all across this country training different organizations on how to get that information out of their system in order to let them make the best business decisions that they can make. I want to give it to you on a smaller scale. We're going to talk about a lot of things, and I want to share a lot of stories with you, things that I have encountered, what to do and what not to do in this. And by all means, if I'm moving too fast, tell me. If I'm putting you to sleep, tell me, we can do that too. Okay, but we're going to talk about, there is no one magic formula for operating a business. It really depends on the business that you have. And I would love to hear about every one of your businesses, but we're short on time in that respect. 3 of the things that are so important, critical components to the success of your business. Financial management. Who knows what financial management is?
Managing your bills.
Okay, good. Anybody else want to add?
Managing the amount of money that comes in and how it should be appropriated to this person.
Very good. Good. Anybody else want to add? Profit and loss. Okay, good.
Paying your investors.
Okay, good. It is, and there's a difference between financial management and competent financial management. You need to be competent in financial management, and what we're talking about is managing, controlling, directing your monetary resources. If you are bad at managing money, your business is going to suffer. But does that mean that it has to stay that way? Acknowledge your strengths and your weaknesses. Second one, planning. Planning goes into looking at, over the next 6, 12, 18 months, what are your challenges and your opportunities? And then you look at, if you have any opportunities, which one is going to give you the best return on your investment? If you have challenges, how are you going to get around those challenges? Planning involves budgeting. How many of you have a budget? How many of you stick to your budget? Okay, all right. How many of you look at your budget every month to see where? Very good, all right. How many of you are actually in business now? Okay, very good. So I get to pick on you. Raise your hands again. I'm going to use you. All right, so very good. Okay, so being able, budgeting is that financial roadmap. You wouldn't get in the car and drive to California without a roadmap, right? Without some directions, right? You want your business to be in that same arena. What is your financial roadmap? Where are you and where do you want to be in the next 6 to 12 months. Budgeting allows you to control your expenses. You want to get into, we're going to talk about that more in depth. Knowledge of your financial management. I want to say, you do not have to be an accounting expert. If you are going to allow someone else to manage your books, you still need to be able to ask educated questions. Those of you who are in business, are you doing your own books?
Yep.
Yes? Yes? Okay. All right. How many of you are you looking at financial statements on a monthly basis? Yes? All right, good. Okay. So, understanding the basics of accounting will allow you to manage your business effectively. We're going to talk about that more in depth as well. Now, budgeting, talked about that. Financial roadmap, it is your plan for future growth. Do you have a plan? Do you know where you want to be in a year? Yes?
Yes.
Is it written down?
Yes.
Good. I teach at the community college entrepreneurship for the entrepreneurship program as well. And I always hear, yes, I know, but it's in my head. I don't want it in here, I want it on paper, because when you see it on paper, it allows you to react differently than if it's in your head. So definitely plan for your future growth. Budgeting allows you to forecast your expenses versus your revenue. What is revenue? Money coming in. Absolutely. Okay, we need revenue in order to sustain our business. So you want to be able to budget. One of the hardest things for startups is identifying, how do I create a budget? I have no history. I have no history. So those of you that are in business now, how long have you been in business?
25 years.
25 years, okay. And you're still doing a budget?
Yes.
Great. All right. Every year?
Well, I do sort of a projections thing that I use every couple of weeks, and I map what I'm doing to it, and
Okay.
I look at how it might do things about every 3 or 4 months. Yeah.
Okay. What's your business?
It's an architecture firm.
All right. Thank you. All right. You're in business now? Okay. How long have you been in business?
5 years.
5 years. Okay. You do a budget every year?
That's a hard question for me to answer. I can't say yes or no.
Okay. All right. Who's been in business under a year? Okay. Did you do a budget in the beginning?
I have a partner,
Mm-hmm.
and I forced him to do the books.
Okay.
So I don't deal with money.
Okay. You identified your strengths and your
Yes.
weaknesses. All right.
day one.
Very good. Okay. So if you are a startup and you have no history, because basically we try to build budget off of history. We have no historical data. So what you want to do is to research other businesses in your geographic area. That's going to give you some foundation to start with. And of course the SBDC can help you with some of that. Correct, Pat? All right. We also can identify, you want to identify your fixed versus your variable cost. Fixed cost is going to be those costs that you have to pay regardless of whether you sell one product or no products, 1 hour of service, no hours of service. You have to pay. What type of expense is a fixed cost? Rent, exactly. All right. Now, is utility, do you consider utilities a fixed or a variable cost?
It can be
Said fixed. It can be fixed if
On the
you,
budget plan.
that's right, that is true.
My stage right now, I'm investing into this product. I'm not making a lot of profits. It's not a big swing for me. But when I'm
Right.
making money, I remember my accountant telling me when I was making a lot of money that I just threw a lot of it away.
Yeah, okay.
Can you say what regional salary is? Just so like.
It depends on
everybody
your
knows?
position. Depends on your position. So if you were, for a consultant, they would be making $80,000 a year.
In other words, they don't want you paying yourself for really, really little salary that gets taxed, just because you have the benefit of taking a distribution and not, you know, it has to be a reasonable
A balance,
there, yeah.
exactly.
And you're not
Exactly.
cheating the system.
But as a small company, you can justify a lower salary if your accountant signs off on it.
If your profits are low, exactly, then you can't get what you don't, what's not there. So absolutely, you can justify it. So you wouldn't want to take a low salary and then a big dividend.
So if you're just barely getting by, then an LLC is okay for right now.
It's okay for right now.
I'm with
The tax rate,
Wawa
like the
has
rate
free
itself,
coffee
is going to
today.
be the same.
forgot about
Is it going to be the same on an LLC and an S corp? Is
No.
it the difference?
There is a difference.
Okay, so the difference is in the rate and not just how much you can write off and how you do
So
it.
your business expenses are huge in that. When you are an LLC, you are paying that 15.3% self-employment tax, and that's not what you're going to be doing with the S corp.
Okay, so with
Okay.
the S corp, it's a different rate.
It's different, right? So you get exactly.
Okay, so here's my other cuckoo question.
Okay.
So I bought another business this month,
Okay.
and she was paying herself a healthy salary.
Okay.
So since I did my paperwork just to get things going as an LLC, but if I run the business as comfortable to what she's been doing and I'm able to pay myself the same way,
Mhm.
then I need to be the S corp from the get-go.
I'm going to say,
Talk to you.
exactly. I would be remiss in answering that question without knowing your full
Yeah,
picture. Okay,
that's-
so you want to talk with the person who knows
The business.
okay?
Okay,
I
no.
mean,
All right.
I've just gotten the paperwork to form an LLC. I don't have any finances yet.
Okay.
No taxes yet?
No taxes yet.
Okay,
So, but are you doing business?
not yet.
Not yet. Okay. So, talk with your accountant first and look at what you project to make. Okay? And then you look at your personal tax situation. And then you let them make that determination which tax structure is best for you. Okay?
But don't you have 4 or 5 companies?
I have 4 magazines, but it all
One
falls
company.
under the company.
now you have 2
And then I
companies.
bought the second
So
business.
at some point, you may have to look at having a management company, and you run that, and they pay you a fee, right? So she gets a salary out of one.
Yeah, that could work as well.
But so my customers have
Company, also
stores all
magazine.
over, so they set all their stores up as separate companies, and they have a management that owns that, and they pay their administration
Oh,
out
yeah,
of
yeah.
that. And then each store pays a fee
Yep. Yep.
out of that.
Yep.
I don't know
that's
exactly
one
the
way to
reason,
do
but
it.
you're getting close to that, I would imagine.
You need to look
I'm
at,
about to go to Hardee's and fly.
you're funny, but what you want to do is look at the
That's your
two
third
of your businesses together and see what that effect is going to be.
So I should not do my own accounting stuff for one business and have someone else do it for the other business.
Correct.
Okay.
All right?
Okay.
That's right. And here's the thing. You want to know, what did I say about keeping your finger on the pulse of your business?
Yeah.
Okay? So I'm projecting, even if, okay, this is what it would have been, how would I have handled it?
Right.
All right? If this business jumps, if it starts booming in the next month,
Yeah.
what are my liabilities going to be?
So go ahead.
How
It's
do I-
best to plan for success.
Exactly. Okay?
You don't have to be in business to meet with an accountant. and
Yeah, right.
Lay this out.
Yeah, it's a good idea.
They're pretty good about telling you can't afford me yet.
Yeah.
Which that's also good to
Maybe
know,
you should be able to
Right.
afford
But
them if you're gonna try to open a
They'll
business.
figure the triggers of when it's time.
And then they're also good at saying, just keep track of everything and then we'll get your QuickBooks going.
No, but, okay, well, here's the thing with that. I am a believer that you need to get your finger on the pulse of your business. That means you are tracking it all from day one, okay? You need to know if you're not generating any income and all you're doing is expenses, you need to have, how long am I going to continue not bringing any income in? How long can I sustain this business? You have to have a plan. You need to know if your expenses just keep growing and growing, but you're not generating any revenue, what are you doing?
Practicing.
That's what you're doing?
Free samples.
Okay. So, I know
Say
of,
investment.
I know, it's an investment, okay. I know of a business, they did no market research. They started a business, they didn't look at their demographics. Opened a business based on something that you could get, the government was offering for free. They put it in a locality where the median income was $29,000 a year and they billed $75 an hour.
Wow.
How are they gonna survive?
Well, do those people know it's free? Because if they're not educated, but they know it's free, they'll still pay the $75.
They know it's free, but where are they gonna get it from? They make
It's
money
$75
out of it.
an hour.
Based on selling information that's like already available. I mean, so.
So,
That is true. There's nothing that I can't do that you can't find on Google.
But even scammers don't win if they can.
so, bottom line
No, you're
is,
talking about
he was in
skills.
business, he rented a $450 a month office, did all the, marketing, all the things, and guess how much money he made? Zero. 6 months, not one penny. You gotta do your research, all right? So when you are tracking your information, you track every transaction, you have to categorize where are you spending your money? Where are you spending your money? Yes, ma'am.
Research ever fail?
Research, absolutely. It can.
Okay.
You gotta make sure you are looking at the right research. Okay? Just when you see something good, you need to dig a little deeper, look at the negative and the positive, and then you make an educated decision. Yes, sir.
Yeah, while you're on that topic, do you know of any great sources of market research? I know all of our industries are wide across the board, but if there's any like central location that has like studies or reports or
The Chamber of Commerce.
well, you got market research?
And the Gateway region folks here.
It's anywhere, yeah.
Okay, so the SBDC can help you with that.
Mhm.
There are several websites out there. One sticking in my head is bizstats.gov, I believe it is. I think it's BIZSTATS. I can't remember whether it's .com or .gov. For equity, so important. How do you build equity in your business?
Hard work.
Hard work, yes.
Reinvest.
That's a must. What is that?
Reinvest.
Reinvestment, okay. So definitely being able, it starts out with your initial investment and then it definitely changes as your business makes money, if it loses money, those types, that's gonna change, but you wanna keep your finger on it. Know whether you are making money or losing money. It makes a difference. Don't let your business operate without you being a part of it. Why are you starting this? Are you starting it to create another issue? Or are you starting it to actually be successful at what you are doing? Build a solid foundation from the beginning. Okay? Knowing where am I spending my money. So, you got a cell phone and you got a landline. Would you throw them all into telephone expense? No?
If it's a landline for your business,
Mhm.
yes. If it's your business cell phone, yes.
You would? Okay.
Yeah.
So,
Because I only have one cell phone.
everything is a negotiating factor. That's how I want you to look at it. Okay? So if I say to you at the end of the year, how much did you spend on cell phones this year? What are you gonna do? How are you gonna tell me?
Add up the total monthly cost.
Now you need to go back and do some more work. I don't want you to do the work. I want you to have it at your fingertips.
Oh, just ready? I'm terrible at math, so
Okay.
probably
No,
like
no.
400
No.
bucks.
What I'm saying is, in your chart of accounts, you're going to break it down separately so you can look at it. If you were to run your profit and loss statement for the entire year, you would be able to tell me right then how much you spent on cell phone.
Oh, add on my chart of accounts. Okay.
All right.
So-
Reason being, I'm sorry.
So, like I pay Comcast for my internet and my phone,
Mm-hmm.
should I be somehow splitting it?
It's split on your bill.
Right, I know it's split on my bill, but
Mhm,
if you
so
want me
you
to
can
put
do
my
it.
hands on it quick, so
Yes.
it should be in my chart account that way then?
Exactly.